Talking about markets, let's also welcome in an important guest for today. Taher Badshah, fund manager at Motilal Oswal, joins us. Good morning, Taher. Good to have you on the show. And especially given the kind of volatility that we've seen, an opinion like this becomes even more pertinent. What's your view? I mean, where are we headed from here on? Do you see even lower levels after the sharp recent correction from the 89.68 level that we've seen on the index?
Well, it's very tough to call on short-term moves in the market, be it this event or any other event for that matter. But I would tend to assume that we've seen a fairly sharp correction both in the large cap and particularly in the mid cap space from the recent peaks, and that's a very healthy correction for the market as a whole. So I would assume that the market would probably start stabilizing from here on, and wait for more evidence, one of the actual ground level impact of the demonetization issue, and how long will it probably take for businesses on the ground to actually come back or restore to normalcy. So that is the evidence which the market would look for, and the other also being that there are a fair number of important events which are lined up starting now up until almost into the first 3 or 4 months of the year. Everything from the Fed event, maybe that may not now be as important, but it is then followed by the budget, and then we have the GST rollout hopefully, and post that we may also encounter the UP election related uncertainty. So I think even if the market, I would probably think that there's a fair chance that the market might just settle down here and maybe remain range bound for a while till the time there is some more clarity in terms of news flow, government action, if at all any kind of policy stimulus, etc., and then react accordingly. So I don't really see a situation where there will be a further collapse in the market immediately solely on the issue of demonetization. I think that is now reasonably well captured in the market for now.
Right. Taher, in terms of the impact of demonetization on certain sectors, we've seen that big CASA accretion that will come through for many of these public sector banks, and the cost of deposits cooling off. Also, the basis and the argument of a rate cut is being made on back of maybe a disinflationary move that may pan out. We've had the October CPI inflation at 4.2%, which is well beneath the near-term target for the RBI. So do you think it makes for a good cocktail in an environment where credit offtake is a little sluggish at this point?
Yes, so credit offtake has been sluggish, and there is as of now no immediate reason to believe that corporate credit offtake, at least for the corporate sector, will probably revive significantly, and that is going to be as the way trends have been till now, up until very recently. I think on the other hand, you may probably face a little bit of pressure on the consumer credit side of the business, which has kind of been holding up many of the banks, private sector banks in particular, as well as some of the public sector banks too. So to that extent, there is while there is a lot of CASA deposits which are flowing into many of these banks, particularly the public sector banks, one has to see whether there is real offtake on the other side, and otherwise it will largely be treasury related income which will probably help at the margin from this event. So that is need not necessarily be the most desirable outcome of this whole liquidity surge which will happen in the banking system. So I think the government will have to do well in order to ensure that public spending and then private spending also with a lag follows, so that the necessary demand environment for credit offtake can happen, and which can then utilize this liquidity which is awash in the banking system.
Right. Taher, valuations of course have adjusted after this big fall that we've seen. So is it an opportune time to dip into certain large caps, certain mid caps with proper fundamentals and strong cash flows? Any specific sectors that you're looking at this point and you can share with us, or even names for that matter?
So, the valuation dislocation is a little more severe right now because, we've seen a correction in prices, but we are also going to see a a fairly large disruption in the near-term earnings profile of many of these companies, and it's very hard to gauge as to what will be the level of impact. In some businesses, it could be probably minimal impact, and many it could be maybe as high as 30, 40, 50% as well. So market is trying to settle down to understand as to whether the valuations have actually corrected or not, because we've seen only price correcting, but there is an earnings hit as well, and that may not have necessarily been yet accounted for by the market. So I think, like as I said, that the market will continue to react to incoming events and actually what happens to the ground, so as to be able to assess whether the P multiples are right. Of course, from a longer term perspective, India would deserve to have a higher P multiple as a result of whatever actions are being contemplated by the government, and we know that they are positive from a longer term perspective. So it's a question of the trade-off between the near term and the long term, and the way one should approach it, and the way we are approaching it, is that one should still be comfortable with the kind of franchises and the businesses which you are owning. If you have any reason to believe that there are any of your portfolio holdings which are going to be significantly impacted as a result of this move, not in the short term but more in the medium to long term, either way, either they could be advantaged or maybe they could even be disadvantaged, then you need to take necessary action to correct that anomaly in your portfolio, either buy more of it or sell off from those positions. So that's how we are approaching it. We are spending more and more time thinking more about our companies that we have in our portfolio, rather than worrying entirely about macro. And yes, we know that there is an event which is materialized as a result of macro, but it then finally for us is a challenge of how do we assess the impact on our companies. Maybe there will also be companies which will be significantly benefiting out of this. Most of the street has been concentrating on who will be hit, especially in the short term, next 2-3 quarters of earnings, but there's very less focus on who could be the winners. There could be some very large category winners, and businesses who would turn out to be very advantaged as a result of whatever is happening. But that's something which the market is paying less attention to right now, and I think that is where our focus, that is what we are doing as fund managers right now after this event.
Right. And before we let you go, your view on the expectation on the next quarter's earnings. As you said that there might be some kind of a crunch that we see across sectors. Also, given the fact that commodities have run up quite a lot, and the WPI index is also surging now, as opposed to the divergence that we saw when it went into negative in the last year. So FMCG companies, paint companies, consumer durable names that have been beneficiaries of raw material cost, you see some bit of margin crunch coming through going ahead, and even steel makers for that matter, on back of coking coal, or say for instance iron ore, have gone through the roof in terms of price.
I think at the more discrete level, there will be earnings hits in different kinds of companies. At the index level, I would think that the expectation in any case over the next 1 or 2 quarters was largely driven by some of the sectors which were going to turn around, such as commodities, such as public sector banks, who would probably see a lot of base effect related gains, and coming out of NPA stability, and after the disclosures which happened as a result of the RBI dispensation last year. So that is I think still intact, in the sense that PSU banks will still see a good amount of growth YOY earnings, and plus even this event is in a way at the margin only positive for some of these public sector banks. I think we might, if at all, see earnings disappointment from some of the consumer and auto kind of space related companies, and maybe their overall contribution to the overall Sensex or Nifty earnings swing incrementally for the next 1 quarter or so may not necessarily be very high. Although at the discrete company level you will probably see an impact, but measured at the aggregate of the Sensex or the index level, Nifty level may not necessarily be very high. Commodity companies, their turnaround continues to still remain reasonably intact. Prices of commodities have been reasonably strong even after this effect. So I would assume that that part of the earnings manifestation would still continue into the next quarter or so. And the overall, therefore, the broad Sensex or EPS, Sensex or Nifty EPS number may not necessarily undergo a significant cut. At the individual company levels, more discrete, more let's say in the mid-sized companies, you might probably see adjustment of earnings to a larger degree.
Right, Taher, we're going to leave it at that, but appreciate you joining us with a view on the overall markets and your outlook from here on. We hope to engage with you more often in the future. Well, let's move on now, and on back of the current, on the demonetization of the 500 and 1,000 rupee notes, you've seen us expect an impact across sectors, specifically real estate, infra, road developers, and one space that takes the cumulative hit of all this is the cement space. So it's important to focus on those names as well. A lot of retail transactions, in fact, a bulk of those, as far as the channels go, happen on cash. So we have an important voice to discuss the impact